to talk about some of the market action, folks, as we do every Monday at 3:15. We're going to jump over and talk to our man, Steve Rhodes. You can check out Steve's outstanding program, folks, The Trader's Edge, every market day, 11 a.m. until noon. And don't forget to check out right under the newsletters tab, Mastering Probability. You can sign up, folks. It's $149 for the month, or you can sign up $695 for 6 months. You save $199 or $1195 for the year. You save over 33% or $593, and they all come with a 30-day money-back guarantee. So I encourage you, if you're thinking about staying on, then think about checking out some of those 6 months of the year. Steve Rhodes, good afternoon.
Hey, Tommy, happy Thanksgiving to you and yours.
Happy Thanksgiving. Boy, is time flying or what? It's here, Steve. And then a week from today, we're in December. Here we go, man. Let's go. Are you doing your shopping? They got Black Friday sales everywhere.
Well, the only shopping I did today was bought the Big Bird. So we at least got that out of the way. So
that's what you need, man. Some good. And now you got to get the fixins, man. You got to get the fixins, of course.
Yeah. Great day of the year. Great day of the year, favorite holiday, good for food. Seems to always be the kickoff of the getting sick time period, because we all overeat so much, right?
Yeah, totally.
Not great. So I thought we could do today is let's talk about, a couple things. One is the spot fix index, which sometimes, folks refer to it as the fear and greed indicator. It's really an extraordinary tool for interpreting the message of the markets. And that's what I want to do today. And the reason is because last week was really a perfect example for it. So let's begin. This is a chart of the spot fix index. If we take a look at that little yellow rectangle, that encompasses the movement last week. So quite a bit of volatility last week, and it really does provide us with useful information about the interpretation of what the market is communicating to us. So I don't really like the fear and greed thing because it really doesn't tell me anything. I want to be able to share with you what the spot VIX does tell us. So the bottom panel on this chart, what this does, Tom, is it looks at the one-day rate of change. So that means from yesterday's close to today's close. And what I have found, so the bottom panel here, you'll see a yellow horizontal line that says 10, plus 10, and one that's minus 10. I look at those days where their one-day rates of change either above plus 10% or below minus 10%. And close above 10%, they usually have what they usually typically generate is they tell us that the next day that we should expect or anticipate some type of bounce or bottom. And last Thursday, as an example, spot VIX index closed higher by 11.67%. One of the things that I shared during the show, and I show it, each day if the patterns are present, but most specifically when we have these high volatility one-day rates of change to the upside out there, is they tell folks what they should be looking at overnight. Sometimes it starts early in the afternoon, 2:30, 3 o'clock, but at least look overnight, and we're looking for bottom patterns. And these are part of the bottom patterns that I teach during the Trader's Edge show as you mentioned, there's a number of workshops that folks can get access to this. And the best times, the best rallies that we get, I have found, are when each of the 30-minute time frame charts for the equity future contracts put in bottoms at or about the same time. So if we take a look at these blue, so we knew the night before we had a one-day rate of change above plus 10%. That said that Friday morning, we should be sometime on Friday, we should at least be expecting or anticipating some type of rally. Turns out that at 6 o'clock in the morning, this is the blue arrow here on the upper left, that's the ES mini 30-minute time frame, and these patterns are confirmed with bullish or bearish reversal candles. In this case here, a bullish engulfing candle formed. If we take a look at the NQ at 6 a.m., it was a bull sash candle that confirmed the Rhodes momentum indicator signal. On the Dow equity future contract, it actually formed a bottom pattern much earlier, and as the ES and the NQ are pulling back at 6 o'clock, it was actually forming a TD9 count bottom pattern. Not that we need two bottom signals out there. One is just enough. And then finally, Russell 2000 also at 6 a.m. from that Rhodes momentum indicator bottom. So that was a signal that we were at least going to get a rally. Now, I don't have the chart here to show, but markets were oversold. And how I calculate that is I use the New York Stock Exchange, its advanced client oscillator. And when that gets below minus 150 level, it's oversold. So we were also oversold going into Friday. When the day was done on Friday, we had the spot VIX index closed lower by minus 11.32%. So now we're on the other side. We're on the below minus 10%. And what that does, you can see this chart here, I put green and blue arrows. The blue arrows are those days where we had a spot VIX index that's above plus 10%. That says expect or anticipate some type of at least a rally or a bottom to form out there. The green arrows are when we have those one-day rates of change below minus 10%. And they are initiation signals. And you go back through this chart and you can see how often they work. tell me, I've never found one tool that works 100% of the time. Have you?
Not in the, if I can't tell you if I did, Steve. That would be if I did, right? No, I can't.
Oh, that's right. There you go. That's right. You couldn't tell me. You couldn't tell me. So, but it works.
Of course.
It works really well.
Right? Yeah.
Yeah, it works really well. And today we're seeing another example of that. And so Friday's action actually for the Russell 2000, it had an A to B equals CD pattern to the downside. Those are the blue diagonal lines that you see on my screen. It had made the 1-to-1 price objective. And then the way that I take a look at a bottom being formed on an A to B equals CD pattern is the cavalry arrives. That means a bullish reversal candle would form. It was only the Russell 2000 for both its equity future contract and the cash indice that have generated those bottom signals out there. And what I've also drawn in here are descending trend lines. So here's another cool tool about the spot fix. So last week we had those signals telling us to prepare for a bounce. We got that bounce. Then it told us, hey, at the end of the day, expect this to continue. That most certainly has continued today. Another cool thing about the spot VIX is sometimes things get out of whack. And by out of whack, I'm referring to the spot VIX is trading well above all of the forward future contracts. That's referred to as contango. What that does tell me is I generate a ratio that takes a look at the spot VIX versus its 3-day index number versus its 6 months and versus its 1 year. And when those ratios get to above 1, tells you again the spot VIX is trading above all the future contracts out there. It generates a signal that a potential bottom is about to form. I say potential because the signal doesn't get confirmed until that ratio dips back below the 0 level. Well, we got a signal on Thursday for all 3 time frames, and by Friday they dropped right back below 0. So it's another indication of an impending bottom. A lot of people are asking, well, what about all that selling on Thursday? What was that about? One of the things that here's a 5-minute chart for Thursday's selling out there, and this to me is this is a 5-minute chart. This is the ingredient of trading desks that are selling out there. They're either exiting position. I mean, we don't know what they're doing, if they're totally selling, but here, take a look at how a trading desk is able to, on these 5-minute bars, keep things in control, so to speak. No big moves to the upside or the downside, but price never closes above a prior bar's high out there.
Amazing.
And folks should be looking for that.
10 points, 10 points, 10 points, 10 points every 5 minutes, right? I mean, that's right. An amazing chart. It is.
That's right. Yeah. They're buying and selling. If it starts to get out of control to the downside, then they're buying because they want to kind of keep things in check while they. So really, Thursday's action was really more about exiting a position than it was, hey, we're ready to start a bear market. At least that's how I take a look at it. So the next key levels for resistance on the ES and the NQ with regard to overnight activity, 67.47 for the ES, the NQ 25.186 out there. That's what I would be looking for. I'll give folks here during the last 24 years, the S&P has rallied into Thanksgiving. Here's Monday, Tuesday, and Wednesday out there. So I expect that we'll rally into the end of the day on Wednesday.
And then watch out a little bit for Friday on that chart. It looks
there
like
you
everyone's
go.
a little,
right.
No one has the energy to get in there and buy. They're all sleeping from all that good turkey.
That's right.
Steve,
That's
awesome
right.
information as always, man. Always look forward to it. Hey, have a great Thanksgiving, okay? And we'll talk to you next week, man.
Take care.
Take care. Folks, we'll come right back.